everyone, my name is Brian and welcome to Copycat Trading. In this video, I will show you the basics of technical analysis and how it differs from fundamental analysis. Now, I just published a video on fundamental analysis and I hope that you have watched that one. It'll help you to understand this video a little bit more, and I also make some statements in there that will help you to see when technical analysis will fail. Fundamental analysis and technical analysis are two very different methods, and if you are going to trade on your own, you'll need to consider these two methods. All right, so let's dive right in. Let's get to the definition of technical analysis. Technical analysis is a method used to evaluate investments and identify trading opportunities by analyzing trends gathered from previous trading activity, such as price movement and volume. Unlike fundamental analysis, which attempts to evaluate a security's value based on business results, such as sales and earnings, technical analysis focuses on the study of price and volume to forecast future market behavior. Now, there are three, I'm not going to exclude it to just three. There's three that I'm going to cover in this video, key aspects of technical analysis. They include price charts. Technical analysis uses various types of charts such as line, bar, and candlestick charts to observe historical price pattern and trends. And don't worry, we're going to look at each one of these. There's trend analysis. The concept that the trend is your friend is central in technical analysis. Analysts look for trends in the market or a specific asset to inform their own trading decisions based on technical analysis. And then number three, technical indicators and patterns. These include tools like moving averages, RSI or relative strength index, Bollinger Bands, MACD. Analysts also look for specific patterns like head and shoulders, wedge patterns, flags, which are thought to be indicative of future price movements. Now, I'm gonna show you just a few of these. I'm not going to look at every one of them. Of course, there are literally I wouldn't say hundreds, but there's at least 100 patterns out there that people are going to look at. But let's just take a look at some of them here. I had the Bitcoin chart up before. Let's take a look at the spiders chart. And whenever we're looking at the SPY, don't worry about what this is. Just it's a chart as a chart. Let's just say this is the price of a stock, and this is based on the daily analysis. And if you haven't watched my video on what is the candlestick and what is the volume, go back and watch that. It's a basic understanding or basic introduction to what these candlesticks are and what these numbers are down at the bottom. These are volume bars and these are candlestick bars. I wouldn't worry too much about these lines, but these lines here are what we call moving averages, and I'll get to those in just a second. Actually, I'll briefly touch on them. All right, so this is reflecting the price. If you'll notice down here at the bottom, this is simply a graph like what you used in high school. This is your x-axis and this is your y-axis. The y-axis is going to contain the price. The x-axis is going to contain the dates. So over here on the far left-hand side of my screen at the bottom left, you'll see the date down here at the bottom. This is February, and then whenever I bring the cursor up just a little bit, you'll actually see the date appear. That's Wednesday, February the 1st, 2023. And then I can go all the way over to the right, and you'll see the dates changing all the way till yesterday, which was January 19th, 2024. And that's a daily chart. I can select different time periods by selecting these buttons up here. There's my weekly chart. So this goes all the way back to the COVID lows, and you can see the date down there at the bottom, March 23rd, 2020. And then I can go all the way over here once again, and this is the week of January 16th, 2024. So let's go back to the daily chart, and what this is showing is on the daily chart, here's what the price movement did. And each one of these candlesticks, each one of these things represent the time or what the price was doing during that particular given day. And so I went over that in my little video on what the candlesticks and volume were. I would highly recommend, if you don't know what they are, to take a look at them. You may have seen something like this rather than the candlesticks. You may have seen something like that. And let me just remove these moving averages so that you see it clearer. But you may have seen something like this. This may have been what you were used to. But if you're getting into it seriously, then I would really recommend that you use bars or candles. And so this is what I use. This is the candlestick, and it just shows what these are doing. Okay, now I can use this chart as a technician to evaluate what the future price movement is going to be. The next thing that we use, and the number 2 on that list, was the trend analysis. Now, trend analysis is done with these what we call moving averages. I'm just going to put one up here. This is what's called the 20 moving average. The 20 moving average is basically the average of the closing prices of these candlesticks divided by 20. Okay, so it's the last 20, and I'm taking the close, and we're basically averaging that out into a nice smooth pattern here. And so this is a 20 MA. Whenever I put two of them together, I can actually determine what my trend is doing. So if I got two of them that are trending up, then that means I've got an uptrend going. If I've got two of them trending down, that means I got a downtrend going. So in this case, on the daily pattern, we have an uptrend on the SPY. And so the old saying goes, the trend is your friend, except at the end. And so if you're following the trend, you're investing based upon the trend. When you see the trend go up, some people just say, you know what, the trend is up, I'm going to jump on board, and they just jump on board. And so and sometimes that works. Sometimes it works for people. And so they're just basically trend investors. So they're using a trend analysis. And then the third thing here on this is technical patterns. Now, you can get absolutely crazy with technical patterns. And I brought up a chart of Apple with all of the technical things on it that you can look at. I mean, this is just absolute craziness. I like my charts nice and clean, but I brought up all the moving averages that people like to use. Some people like to use 20 moving averages, 50 moving averages, 200 moving averages, and even an exponential moving average. And so you can see that just on the chart. And then down here is what's called the MACD, and I'm not going to cover what that is. And then down here is the RSI, and I actually use that, but very limited. And then down here is the Bollinger Bands, and you can just get crazy into what a technical analysis, and it doesn't have to be this complicated, but some people enjoy this amount of complication. I don't. I like mine nice and clean, and then I'll actually put an RSI down here at the bottom, and I'll use my moving averages. But technical analysis can be applied to virtually any chart with historical data. You can chart out your own life with technical analysis, but technical analysis is primarily used on data having to do with stocks, forex, commodities, cryptocurrencies, etc., like that. This approach is used for short-term trading strategies, although some techniques may be applied for a longer-term analysis. Primarily, it is shorter term. Simplistically, if I'm going to talk about it simplistically, technical analysis is used to look for support and resistance line to tell us the psychology of the market. A lot of people think this is voodoo, but it really is not. It is just support and resistance line. And to illustrate that, let me take you, I think, to silver here. Yeah. Okay, so I've outlined here between the dates of, this looks like January of 2015 all the way till about June of 2020, an area of support and resistance on silver. Okay, that you can look at, and you can line these up. So if you were to take this line and you were to draw it here, and then every time it hit that line you were to buy, and then every time it hit this line you were to sell, you'd be doing pretty good. Okay, or if you were just to use it as saying, I'm going to exit some of it. So this is a support line, and you can put it in here just about anywhere. You could draw it up, you could move it around, you could do whatever you wanted to do with this line. You could say, you know what, I'm going to move this up here during this time because the price is staying up. You can move it down here during this time and say, I'm going to wait, be real conservative, and I'm not going to do it until it hits down there. You can do all kinds of stuff. So the support and resistance line, the technician's the one that controls where this goes. I can actually move the angle of it up slightly, and I can move the angle of it down, and I can move it, make it thinner, I can make it wider, whatever the case may be. So what this says is this is a support line down here, and this is a resistance line up here. Essentially, that's all I'm looking at. As a technician, as far as simplicity, that's all I'm looking at. Some people use the support and resistance lines to outline psychologically where fear is going to be or where greed is going to creep in. But no matter what you're looking at, if you're whenever you're taking technical analysis and applying it at the most simplistic format, we're looking for areas of support and areas of resistance, and we're a lot of times drawing those in. Okay, so that's an example of support and resistance. Now, here's a few statements about technical analysis. Fundamental analysis will always trump technical analysis when things go wrong or good. Okay, let me just give you an example of this. Let's look at SMCI, and this just happened yesterday. All right, SMCI, here is the technical analysis. Technical analysis before this date. Let's just ignore that last candle there. Technical analysis before this date is, here's an area of resistance, and this is an area of support. And I'll just outline it here with a good trend line. I'll draw it in here like this and say, okay, there is my level of support, roughly drawn, and then this is my level of resistance, and it absolutely is the all-time high right here. You can see that it came up to it one time and pulled back. That is a time of all-time resistance here, so it's going to come up here and it's going to pull back. So whenever the price approaches that, then I should expect a pullback. Fundamentally somebody came in here and they gave news. And that little lightning bolt there represents that there was news. And there sure was news on this day. So fundamentally, somebody came and gave news, and that sent it soaring right past the area of resistance. So fundamental analysis will always trump the technical analysis over time, number one, but also in when something goes right or something goes wrong. The opposite of this would be a large drop. Let me see a technical analysis on, let's see here. Hasn't been really a bad one on these guys on the Magnificent Seven in quite some time. Let's just see if we can go back and maybe look at Microsoft's technical analysis. If we go back to where there's a massive drop on yeah, well, that's COVID. I don't want to go there. Well, we'll use COVID as an example. We'll go to the SPY and we'll use COVID. So technical analysis, if we're looking at this date before COVID hit, and this is right here is whenever COVID was announced, February 21st, 2021, and of course then the price began to drop down. And of course, if you remember, the President of the United States and several other leaders of the countries got on and began to make their announcements in early March, and then the price just really plummeted. But let's just take this as support and resistance line. There is a support line right there. Comes through here, and there is a resistance line right there. Look at that. Nice breakout. Fundamental analysis was just chopping around in here, or excuse me, technical analysis, we were just chopping around in here going, man, I'm going to buy here, and I'm going to sell some of it here. Had this breakout up here, and we're like, oh my goodness, we're just absolutely going to be soaring here. Where is the market going? And then all of a sudden, the fundamentals came in and flush. So fundamental analysis will always trump the technical analysis. But what technical analysis allows us to do is it allows us to see the emotion in the markets in the short term and also trade off of that better than what a fundamental analysis can do. I showed you, I believe, in the previous video of Bitcoin's price and how that the technical analysis showed that we had an area of a thought process where the Bitcoin price was just going to go to 100,000. And what was going on here is the guys were just completely ignoring any of the technicals, but they were saying Bitcoin was going to go up here to 100,000. It's going to scream up to 100,000. However, all the technicians, we were looking at this support, or we were looking at this resistance line right here. And you had this resistance line where you had this previous peak right here, and then you had a place where it kind of settled down right in here, and you had an area of settled down right in here, and there's an area where it came down and it pierced it right there. All the way across here, there is support and resistance lines. There's places where the stock price stopped in its tracks right here. Now, keep in mind that there are people who invested back in 2022 on April the 3rd or April the 1st back in 2022 who thought Bitcoin was going to go to the moon right here. And they've been sitting there since April or March 31st, 2022, and they've been sitting there waiting in pain as they saw the stock price come down. Now, it's the first moment that they get a chance to get out, they're going to. So they watched the market go up here, and they're like, oh, please come up. And they watched it go down. They went, oh, no. And they watched it come back up, and they're like, oh, please. And they watched it go down, and they go, oh, no. And then they're sitting there, and they're in pain, and as it comes up, and it comes up, and it chops, and they're like, it's almost there, it's almost there. And then, boy, they said to themselves, whenever they came to this date, they were like, everybody else was saying, whenever Bitcoin's ETF gets approved, this price is going to go to the moon. And they're thinking to themselves, man, I hope so, because the day that it does, I'm getting out. And what happened is the price jumped up there, and all of these sellers that were in this area, not just from here, but sellers that were in here, buyers that were in here, buyers that were over here, buyers that were over here, people that had bought even up here. Maybe they were looking at this particular line, and all kinds of other reasons psychologically of why the market would sell whenever we got the price up to here. They were all waiting. And when the price came up, they had their triggers set and an order already set out there waiting for Bitcoin to get to this price, and they drove the price back down because there were so many sellers and not enough buyers. So whenever you're looking at fundamental analysis, thinking that the price is going to go up, but you're ignoring the technical analysis, that's when you can get yourself in trouble. And that works for the short term. Is Bitcoin going to go up to 100,000? Probably. I'm not as much of a Bitcoin bull as what some others are, but I am. I understand why it would go up to 100,000. I do understand that, why it would go up to 200,000 or even further beyond that. But at this point in time, the technical analysis cannot be ignored. So whenever I say fundamental analysis will always trump technical analysis, that will happen in the long term. However, fundamental analysis is not as good at predicting price in the short term, unless you're talking, it's just not as good at predicting price, unless you know something behind the scenes, which is insider trading, and you're not supposed to do that. All right, so number 2, fundamentals are always better for long term, like 5 years or more price movement. Fundamentals are always better for long term, 5 years or more price movement. So in the short term, I can use technical analysis. In the long term, fundamental analysis. So for instance, if Apple says, okay, everybody, this is the last, or let's say they say internally, this is the last round of iPhones that we're ever going to make. Well, fundamental analysis may tell us that they've got 3 years of iPhone sales left. And I don't know, I'm just making it up. 3 years of iPhone sales left, and it could be gangbusters, and everybody could sell like hotcakes. And so they're going to be, it's going to be going through the roof. However, the fundamental analysis tells us that in 3 years, we're not going to be able to count on that stock price to be up. So fundamental analysis is better for doing long term, but the price movement in the short term is better predicted by technical analysis. I have found, number 3, I have found that technical analysis is much faster and more reliable than fundamental analysis for short-term trading, and that's what really matters. Short-term trading it matters for a swing trader or a day trader like myself. So if you're taking a look at, let's just use Tesla here. If you're looking at Tesla and you're saying, okay, today I would like to get involved in Tesla, but I want to know where the price is going to stop if it's going to go down, and I would like to know where the price is going to stop if it goes up. In other words, if the price begins to run, where is this price going to stop? Here it is for the day. Where is it going to go? If it begins, and today is an opening day, let's say the day starts right here and it begins to go up. Well, I know that this candle right here, there's a lot of buyers that happen to be in this candle right here. And yesterday, they thought the price was going to go up, but they weren't. It didn't go up. So I know that there's some people who buy at the close, and as soon as the close happened, they bought, and the price started off down here. Again, go back and watch that video on candlesticks. You'll understand why it makes a difference that the price started off down here. And so they're sitting in the price right in here. They're sitting right there. I'm going to draw a trend line there so we can see it. Price starts off down here. It goes down, and they're like, oh no, it's going down. And then they've got a computer order to sell as soon as their price gets to break even. It comes up, it gets to break even, price, they sell. So the stock price stops right there. So in the short term, I can predict a little bit via technical analysis where the stock price is going to go. I know that if the stock price goes up with normal volume and it goes up into this area here, this is called a gap. And whenever the price gets there, I know the stock price is going to want to reverse right there. And right here, same thing. And right here. There's all kinds of reasons why I know that, and I'll show those maybe in a later video. But the point is that under technical analysis, I can look in the short term and be much more adept to knowing where the price is going to move than a fundamental analyst or a fundamental analyst. Okay? So this is all, that's really all I'm going to teach on the fundamental analysis versus technical analysis, and every chart can be used for fundamental analysis and technical analysis. But technical analysis is what I use here at Copycat Trading. It helps me to determine what the price is going to do on the day to day. So that is it pretty much, everybody. I hope you guys enjoyed something. I hope you learned something. If you did, please hit the like button. And if you haven't already, subscribe. That would be great. And if you want to see more content like this, if you want to get something specific covered in one of the videos, please put it down in a comment, or send me a message, or put a comment in the X, and I will look at it and see what I can do with it. For now, this is Copycat Trader, and I'll be signing off till market open. Y'all have a great day, everybody.